You can lead by two ways. You can lead through fear, by scaring the hell out of your people, or you can lead through inspiration. Because you have a leader that's choosing to lead through inspiration, I think there's other people that are taking note. And I think that in the long run, I think it's just human nature. I think it's a law of the universe that the ones that actually do choose to lead through inspiration are the ones that in the long run are the true string pullers of society and the world.
Preston, we finally got you down to El Salvador.
It's taken long enough, has it not, Mike?
It's taken a long time. I'm excited, though. There's a lot of people that have been trying to get to come down here that showed up for the having party this year. So they did something at the opening session today. They asked people to raise their hands for this first time in El Salvador, and it was like more than half the room. So, yeah. So
I mean, that's what yellow will do to you. You know, how can you say no to yellow?
Yeah, I was talking to him today about getting on the podcast. He's like, so we can figure out how to blur out my face and who I am. And so I'm excited about that one. I actually started listening to you before you were really doing Bitcoin content.
Way.
Yeah.
Really?
Yeah. On what is the Investors Business?
Yeah. We Study Billionaires, the Investors podcast. Yeah.
So it was funny because I enjoyed the stuff that you guys were doing, and I worked as a financial planner for a short stint and came from that kind of background. And so I loved what you guys were talking about. And then I kind of saw your transition, on the show. And I'm curious how that was from being like a Buffett devotee to becoming, quote, degenerate Bitcoiner. Yeah. And, how that was even within people within the, your
value investing side.
That side of it. How people took that, and you were able to pull off transitioning into doing the Bitcoin thing and staying within the network, which I'm assuming was a difficult kind of line to walk. So
especially as the guy that you're covering extensively, Buffett. Yeah. Basically saying Bitcoin is rat poison and all these other things, and I'm here caught in the
that was like your hero, it seemed like.
Yeah,
it was the one you were always that was kind of
It's a little embarrassing to say it, but I think if I had to be honest with myself, it was. I was covering him as if he could never say any wrong, and man, I don't know what to tell you. One of the core things that Buffett and Munger always talk about is thinking for yourself first and foremost. And if there's somebody that you really admire and they're telling you to do something or to invest in this, that is the worst reason to ever do it. And so luckily I kind of always kept that core principle in the way that I was looking at things. Is all right, well, you're saying you don't like this, but I have all these other reasons as to why I think it's going to change the world and why I think it's more investable than anything you're talking about or anybody else is talking about. And I was able to break out of that prison of, I think that there's very, very sound principles of economic calculation that are happening there. And I mean, we could get into that if you want or not, but
I do want to delve into that because I feel like that is how I think me included, want the world to be, but the world's not like that anymore. And so Bitcoin is addressing the world as it is right now. And these people are still trying to act like we're in a world of sound money and financial responsibility, but that's just not the world we live in.
Yeah, I mean, for me, it's okay, well, just if a person was listening to this and they're kind of a little suspect as to the talking point, I would just say, take your house, whatever the value of your house is today in fiat, just write it down, and then convert the value of that into Bitcoin and write that number underneath of it. And then just go back the last 6 or 7 years, and if you could very objectively audit the value of your house over each one of those years over the last 6 or 7 years, and write the fiat number next to, on the top line of that fiat number, it's not going to change all that much. But if you convert it at that spot Bitcoin price for each one of those years, at those discrete moments over the last 6 or 7 years, and you write that Bitcoin price underneath of it, you're going to have your mind absolutely blown.
Housing prices are going down, not up.
They're not just going down. They're acceleratively like going down in a fashion that like you're going to look at the sheet of paper and you're going to be like, hold on a second. Like, what the hell am I missing here? Like, there's something very strange about this. And until somebody like actually performs that calculation and just looks at something that is very near and dear to them, they all understand the value of their house. It's probably the biggest purchase they've made ever in their life, and it's probably ever will be. And when you compare that and you're looking at it, you're looking at this chart that's literally just going straight down in value in Bitcoin terms, and it'll take them days to digest that economic reality. And now do it for Apple stock, do it for Microsoft, do it for, I don't care, you name it, company. And every single company, whether you're looking at market cap, whether you're looking at revenue, whether you're looking at net income, you name the metric, every single metric is just going straight down and to the right in Bitcoin terms. And it's like, yeah, fall asleep at night looking at that chart and not having exposure to this. I dare you.
So how do you, because this is what I always wonder, I know a lot of very, very smart people, smarter than me, that still don't get it. I'm sure a lot of the people that you worked with in your prior podcasting and the shows you're doing still they're not Bitcoiners. They're not in that world. So what is it? Why do you think some people grasp onto it and some people don't? I don't think it's an intelligence test.
Yeah, I think that, I think a lot of people are just so busy with their day-to-day, like how they create value for society. You know, if you're a doctor, you're busy there trying to make sure that you can perform the surgery correctly. If you're a real estate agent, you're just trying to sell the next house. If you're, and I could go on and on. These people, and then when they come home, they're not thinking about that. They're thinking about, how do I get my son to baseball practice, or how do I get my daughter to ballerina practice, or whatever. And so their whole day, and for a whole host of people, they're working a second job. Yeah. And so they're extremely busy with their day-to-day operations, and they don't have time to think about something that's going to impact them 5 or 10 years from now. They're not thinking about something that has absurd amounts of volatility, which Bitcoin does, whether you want to believe that reality or not. It's 70% annualized, 80% annualized. And so they're looking at this thing that a person who has this ability to like really zoom out and look at this really big picture, like you, anybody who's a hardcore Bitcoiner can do that and has done that for whatever reasons. I don't know. Maybe we're wired that way. Maybe we just have.
I think there's even people that are in the there's so many people in the financial space that don't get it. I understand what you're saying about these everyday people. You know, even somebody like my wife, like she's just, finance is not her thing. She uses Bitcoin all the time, but it's not, she doesn't want to talk about it. It's not that important to her. But there's people that think finance like night and day that still don't get it. And
so let me talk to that. So I think today you have this wedge that has been driven between people that have an enormous amount of disposable income, and then it just flips to people that are just barely able to break through and can barely like meet their monthly expenses. And there's literally almost in like World War I where they had the no man zone. Like if you went out of the trench and you were trying to like get in a position to take the other side, there was this no man zone where if you were in that no man zone, you were killed with indirect fire or whatever. And I'm sorry, I'm using military like examples here. No. But you're in that no man no man land, and I think for society at large, you have this wedge that has been broken between the people that have just enormous amounts of disposable income, who are looking at Bitcoin and they're saying, look at this thing, it has 70% volatility. Like, I have no idea what the intrinsic value is. Why would I buy it at 70,000 when it could go to 30,000 tomorrow? Is like their very simplified deduction of what it is. And we know it's way more than that. But for the person who has a lot of disposable income, they're looking at it and they're saying that's their narrative, and they're not having to do any more work because tomorrow they're just going to make a bunch more money, and they're going to continue to send their kids to private school and not have to worry about the stuff that the rest of the world is struggling with. And then on the other side, you have these people who are just barely making enough to make ends meet. And they're saying, I don't have time to study this Bitcoin thing.
Yeah.
I don't have time to, and I don't have the disposable income to even allocate to it. And I think that's kind of the dichotomy that we're kind of faced with of why it's so challenging as Bitcoiners to orange pill or whatever, adjective you want to use to describe, or verb or whatever to describe what it's like to try to convince people of the point of view that you and I are seeing so clearly. It's a function of the fiat system that has kind of like drove this wedge into, there's no middle ground there.
Yeah.
So
do you think in your lifetime there will be opportunity to reasonably invest in other things outside of Bitcoin? Like, do you think that, because I'm wired to I want to build companies. I like real estate. I want to, but you look at it all and it's like it's hard to justify putting any money into it, because you're like, well, I could buy real estate and do all this work and have all these headaches, or I could buy Bitcoin and my fiat value is going to go up probably 3 times as much as my real estate. And so it doesn't make sense. So do you think that we'll ever get back to a time where we're on a Bitcoin standard and people can start making rational business decisions?
I love this question because I know you understand me really well by that question. So I would argue today I've already started investing in things that are other than Bitcoin. But I want to preface this, I want to define this very clearly for people. So the only thing that I own from an investment standpoint beyond Bitcoin is MicroStrategy. I only bought MicroStrategy when the price, the common stock price, was literally below the Treasury, the Bitcoin Treasury value of what he had, because he has a profitable company. And because I would argue another asset that he has on his balance sheet beyond the software enterprise asset is the speculative attack asset that will never be listed on his balance sheet, and that I would argue may actually create more economic value to shareholders than the software enterprise business, because he's able to either go into convertible debt markets, or he's able to take common stock and issue it at 2 times the
things
Treasury
you and I
value.
can't do.
Yes, things that you and I cannot do, because he's a publicly traded company and he has this government, he has this governance structure that's very unique and different than anywhere else. And so for all of those reasons, I'm looking at that and I saw it and I was like, right now at this moment in time, because the common stock is below the Treasury value, this is something that could actually outperform Bitcoin. So I buy it. Now, I say all of that, and my concern is the 6102 risk that's associated with that Treasury. And so now I'm saying, okay, I think it can outperform Bitcoin. How much is pretty difficult to come up with a really solid figure. And this is
it's trading in a pretty significant multiple right now, right?
Today, yes. Which for me, I look at that and I say, oh, well, Michael's just going to take advantage of that. He's going to basically issue more common stock. He's going to transmute that into Bitcoin, and he's going to do all that work for me so that I don't have to sell it, go buy some Bitcoin, and then convert back into it the next time the price is diminished back below the Treasury. I'm just Michael's going to take care of that. I'm pretty sure he understands how to do that just as well and definitely better than I do. So I'm just going to let him do his thing. And so I continue to hold it. And this goes back to my Buffett, buy something and to hold it forever once you find something that you think you can hold forever. And so I'm looking at MicroStrategy based on the price I bought it. I think I can continue to hold that. But my concern is there's still risk that I don't know that I can properly weight to owning equity because of how concerned I am about governments 6102ing the Treasury. And so for me,
and for people who don't know what that is, maybe just give because we have a range of people that are new to Bitcoin or are more interested in moving to El Salvador. So maybe explain what you're talking about.
So in short, I think the governments can get themselves in a situation where they realize that they're truly bankrupt and they have to go rob somebody. And the best person to rob is somebody that you can go into a court system and you can ink a signature on it And because of that signature and because of all the employees that work for an entity and not an individual, they're going to say, oh yeah, here's the keys to these Bitcoin, take them, because I don't want to go to jail and I'm just this employee that makes $200,000 or $100,000 a year. I'm like not going to compromise myself and myself going to jail over something like this. So
and the 6102 reference is because that's happened in the U.S. when they outlawed gold.
That's right. In the 1930s, 33, I think it was, that happened in the United States. It was Executive Order 6102, and so that's called the 6102.
Which is crazy because I think 98% of Americans don't realize that the U.S. government has done that like in the last century. Like it was not that long. We're not talking about early days. We're talking about like there's people that we know that were impacted by that.
2.5 of our lifetimes, and that was already happened. Like it's not very long. It's not far removed from where we're at that this has happened. So I'm looking at that, and as a person that loves performing economic calculation, I'm looking at that and I'm saying, okay, so what is a proper position size? Even though I think it's going to outperform, what is a proper position size for this risk of complete annihilation of the Treasury because of some government actor that's going to step in and raid it and rob us, even though and so when I look at that and I perform that math, which to perform that math, if people are deeply interested in some of this nerdology, you would go into what's called the Kelly criterion. Ed Thorpe, super famous person, wrote a book. I think it's just called the Kelly criterion. I don't recommend this book, but go use ChatGPT, type in Kelly criterion, you'll learn enough. And it'll actually do the calculations for you, which the calculations for the Kelly criterion are very rudimentary, and it's not something that I would equate it to like painting a picture with like a 6-inch brush. Like you're not in there doing any type of detailed analysis. It's very like broad brush type calculations. But when I do that and I'm looking at it, I'm saying I think anything that's 5% to 10% of my portfolio size because of this 6102 risk is probably in excess of proper asset allocation in the face of just owning Bitcoin itself. And so for me, I'm trying to control, and unfortunately I did it through a derivative. I have a lot of exposure through derivatives, which doesn't make these are good problems, Mike. These are good problems, but it doesn't make my job any easier to keep it within the 5 to 10% because of how it moves. Yeah.
No. I was actually, everything moved much faster than I think most of us expected, including myself. So I had planned to, you could buy the in the money calls on MicroStrategy and sell the I don't know, it was like 3,000 or 2,100, and when MicroStrategy was like at 200 for like half the premium you were paying. And so I was looking at that, I'm like, that seems like kind of a no-brainer. Yeah. But I thought I had a little more time, and then it just like popped up. And
well, when you get into derivatives, if people aren't like intimately familiar with derivatives, once you start getting a lot of volatility into the price, it starts getting priced into the derivative of like what that volatility array looks like. And so for me, it was a lot of luck. It was so much luck. And I mean, I'll be the first person to say that. Like the price collapsed quite a bit. It was bouncing around kind of at the Treasury value, a slight premium here and there. It would come down into a discount. But the volatility wasn't bad relative to like what we've seen in the last 3 months. But now that that volatility got in there, now everybody that's a derivatives trader and is using the Black-Scholes model and all these other models, which is also another Ed Thorpe thing, they start pricing that all in there, and now you gotta properly value a derivative with all of this volatility into it, and it's like, I got lucky. I just put it that way. I just got very lucky and very thankful that I had that opportunity.
Well, and when those things come, it does make it a little more like, hey, even if that does happen, the balance of the upside versus the potential downside is in your favor. So
people that are looking at it now, I would just caution them, because you're exactly right. Like generically, we'll just say that the common stock price is trading at 2x the Treasury, and it's like, well, I don't know if it's going to 3. I don't know if it's going to 10. I don't know if it's going back to 0.5. Yeah. And so I just kind of, I know I got a really good basis, so I just kind of sit there and I'm going to let Michael do his thing. And I don't know if it's prudent for other people to mimic that trade right now based on the premium. Or who knows?
And those things can bounce all around, as my wife can attest, because I had her all of her retirement money in GBTC, and so she was like, what is going on? Bitcoin's only down 50%, but this is down like 75. Like, it'll come back. It'll come back. And at that time, it was so, that was early when we put it in. It was hard to, we looked at the self-directed IRA, but it was like so much work and all this stuff. So I was like,
and it is. It is.
And so now when I see people going into ETFs, I'm like, obviously those are a little bit different because they're going to hold to that value. But like you're saying, that you still have that risk, and you're not being compensated for it.
Yeah, you're not.
You have that risk that they can confiscate that, but you don't have any upside on it like you could potentially have with MicroStrategy. So
I would assign a very similar portfolio weighting to the ETFs as like what I have for the MicroStrategy. Like, and I think a lot of people would kind of like get a little snarky with the numbers that I'm using, and go use your own numbers, use your own risk discounts or whatever. But I really think that anything that's like 5 to 10% in an ETF versus spot, that's self-custody spot, I think is egregious.
Yeah.
But hey, go do your own math, figure out your own equations, and good luck. But that's my math.
So what's your opinion on the ETFs and whether they're a good thing for Bitcoin, a bad thing for Bitcoin? I have my own opinions, but I'm curious to...
It's interesting because like when I was talking and interviewing Michael on stage in Madeira, he was very favorable to it, and I guess for me, I'm quite concerned about it personally, and I'm not trying to sound like a fear monger. I really don't, because I really try to look at the world from a very optimistic lens. But my concern is more on the front of, I think governments, especially developed nation state governments, are completely inept. And I think a lot of the people running the major committees that would make the decisions on preventing what's about to happen are totally clueless, and I don't think they're properly preparing for what's happening. And I think for them to properly prepare for what's happening, they have to be like at least taking 1% of all Treasury issuance and having some type of compartmentalized Treasury of Bitcoin off to the side, at least 1% today. And what's going to get really weird is like if the price goes to 500,000, they're probably going to need about 10% of all Treasury issuance in Bitcoin set aside. And the reason I say set aside is because if I was at the Treasury today and I had full control to try to manage all of this, me coming out and saying we're now on a Bitcoin standard, everything's going to be backed by 1% Bitcoin, would probably wreak havoc as if I was at the US or any like Europe or wherever. If I said that and I came out and made that proclamation, I think you literally might melt down. I think they're that volatile and precarious that you might melt down Treasury markets and auctions and all of that. So they almost have to mask and hide that they have figured it out. I mean, I would just say that them taking the Mt. Gox coins and putting them on Coinbase this week, how many billions was that? That to me is a signpost that they don't understand what's happening.
Was that Mt. Gox coins or was that Silk Road?
I'm sorry. Thank you. Silk Road coins going to Coinbase is just another signpost that they are absolutely clueless. Clueless.
It's like you have this gift that was given to you. It's not going to cause any like news cycles or anything to just hold it, but instead,
all they got to act all they got to do is just continue to act clueless, which shouldn't be hard. But that for me was a very major signpost that they don't understand what's happening, that they're not doing this compartmentalized secret like Treasury bond issuance backing of like hard assets, and because of all of that, I'm assigning a higher risk to the 6102 attack on the Treasury of ETFs or anybody that could get the pen stroke, I don't want to go to jail memo from the government for anybody that has a honeypot.
I think that the way that the government reacted to COVID, not even talking about the actual COVID health side, but the financial side in the U.S., for me was very eye-opening.
Yeah.
I have a business in the U.S. and in the food industry, and it was, so crazy how you saw this shift of the government, like making things that impact your business negatively in one way, and then like throwing money at people to try to balance it out, and the way that they would do it. So this will blow you away. And this was my one little peek in this small little restaurant industry. We're not talking defense industry or other things where I'm sure it's more egregious. But they passed this bill, the Restaurant Restoration Fund, and their logic was, and this is something that I think the restaurant lobby was, lobbying for, and they're like, hey, you forced all these restaurants to close down. They're going to go out of business. You guys need to do something for them. But they're so clueless that what they did, they said, okay, we're gonna have this fund. It was like $30 billion, which is, insane. That's like, 6 times the, 6 years of tax revenue for the whole government of El Salvador. And they said, we're going to have restaurants be able to apply for this, and you take your 2019 sales versus your 2020 sales, and we will make up for 100%
oh my God.
Of the difference. So you're talking an industry that works on 10% profit margins. Now all of a sudden you're giving them 100%. So I know people in my industry, because it was a seasonal thing, a lot of them didn't operate at all. And so they had like $3 million in sales
so they just cut all their expenses out. Yeah.
And in 2020, they had virtually no expenses.
Yeah.
And the government cut them a check for $3 million, which they're on $3
million.
Hold
on. So was this based off of the revenue or the net income that they were?
It was on the revenue. So
if you're 10%, basically you made money for 10 years.
Oh yes, they were
10 years.
They and even beyond that, because this is what this was the kicker. They also, genius in the restaurant, whoever their lobbyist was, they're like, well, we should make this tax free too, because we can't tax them on that. That would be
stop.
I kid you not. So I know people that were doing like 2 to 3 million a year, and maybe netting off that like 150, 200,000.
Yeah.
And then they got this $2.5 million payday tax free, and you're like, okay,
just sell the business.
Well, that's what you saw.
Yeah.
A lot of them just sold their businesses, got out. The other ones, bought all new equipment, and it had this hugely negative impact, because it was like half the industry got it and half didn't. So then you have the ones who didn't get it are now having to compete with these people that have all new equipment and all, they're not worrying about what they spend because they got this windfall. So, that was, for me, it was like, wow. It doesn't make sense to just run a functional business anymore. Like, these people have been struggling all their lives, now got this windfall that was
good Lord, that's crazy.
And that was one. That's one
I've never
little.
Heard this.
Yeah. So
I've
that's
never heard this.
one little industry that I only know of because it was the industry that I was in. But this, you multiply this by all these different things, and so even with the paycheck, what was it? The PPP loans, paycheck protection. Even those, they said, okay, well, we're going to make those tax free. But it didn't make any sense to make them tax free, because you were basically paying all their payroll for them. And then they're somehow, well, it wouldn't be fair to charge them taxes. Like, well, you already gave them free money, and now you're going to, you just realize that the people who make our laws and run things, they don't understand how businesses work.
Yeah.
And so they're so easily like manipulated and tricked into doing things, and that's taxpayer money. So we just print more and more of it. So
totally insane.
That for me was like, okay, it's over. It's done. This has become so off the charts that it doesn't make sense for people to work hard and run good businesses anymore. The objective for most people is going to be just to get as much government money as they can. Yeah. And that just accelerates it.
Let me pull on the thread of this just to kind of like lay it out for people. So normally, if let's say the business that you just described in the restaurant business, let's say they were banging out $3 million on revenue, which means let's just use 10%. They're making $300,000 a year. Okay, that business to make $3 million in retained earnings.
Tax-free.
Tax-free. So now you're putting another, 20%
At least
out of the 300,000. So now you're decrementing that another 60K. But let's just ignore the tax because the math gets really simpler if we do. But they would have to stay in business for 10 years to make $3 million, to net $3 million. They'd have to, all those employees, all that management for a decade.
And for most of them, that was, like most small businesses, it's really their salary that they're making. They're not, that what they make is really paying for their living expenses. So they'd never be able to save up that amount.
They wouldn't even be able to save, because they're just paying for their lavish lifestyle of the 300,000. They're used to a lifestyle of 300,000 a year. But let's just say they're able to net it, which they're totally not. Okay. My point where I'm going with this is if all of a sudden you just literally had $3 million show up into your cash account, which would have at least taken you at the bare, assuming you have no expenses, 10 years to accumulate. Now you're going out and what are you doing? You're consuming. You're consuming at a pace.
That's why we have the inflation.
That's right. You're consuming at a pace that is unprecedented. You're consuming energy. Like if you go far enough downstream, what is it that you're actually consuming? You're consuming energy. So like all these ESG policies and, oh my God, everybody's consuming too much energy. Well, I wonder why. We've literally keystroked all of these units into this system. We've literally jammed it down the throats of everybody, and we're acting like they're not going to go out there and consume at a breakneck pace. And it just speaks to why people are looking at the banks, they're looking at the policymakers, and they're saying, why is everybody jamming this ESG like reduction in energy consumption down our throats? Well, it's because you're jamming the monetary made-up paper keystroke units down our throat, and people are just doing what they do. They're going out and consuming with it because they had a windfall.
Yeah. And it wasn't just like, I know a guy at a construction company, and they weren't really impacted, but they got like $1 million in PPP in it. That PPP money just went directly to the bottom line of the business owners. Like the COVID stimulus checks were nothing compared to the amount of money that went out to business during that time.
Yeah.
And those people just went out and bought new cars and bought new homes and all of that stuff.
Straight to your point, like I'm acting like they're going to net 300K and they're not spending it. But the reality is that anybody who's had a 300K net income kind of coming through the door, they've got a big old house, they've got fancy cars, they've got all these things, and they're consuming, let's just say they're reasonable, they're consuming half of that or maybe 200K of that, and they're putting away the other 100. And so now it's not 10 years, it's 30 years for them to net the amount that just hit their cash account. And we're being like kind, we're being conservative with some of these numbers. It's probably 30 years.
Yeah. Well, most of them probably never would have accumulated, but then that's paid for by taxpayer money. So then you have the government creating winners and losers, which is why minimum government is always best. But for me, like it was like mind blowing. Like, okay, there's no coming back from this. And once they get a taste for that, it used to be like, oh well, we'll do $1 billion was like eye raising. Now it's like, oh, let's do a couple trillion, and the next time there's something, it's gonna be. I mean, it really is going to be face melting.
Let's just cover everybody's college expense. I mean, why not? Like, hey, those are all votes. And boy, has the vote turned into the stimulus. It's hand in hand, and this is where it all comes off the rails, right? And is it happening this coming cycle? I don't know, but let me tell you, like the trend and what's becoming culturally acceptable is just coming off the rails, like totally coming off the rails.
Well, I'm like, okay, this showed that MMT is just crazy. But that's not the lesson that the people in government took from this.
No.
The lesson they took was, oh, MMT works. We just have to slow it down for a little bit now, but we can ramp it up again when we want to. And
I think they looked at the market performance. And like anybody who was going through March 2020, like I'm looking at the supply demand like dynamics happening out in commodities, and I'm looking at this, I'm saying, dear God, this is going to get disgusting into like equities and everything else. And I mean, when they came with the fire hose that they came with, and then you watch the equity market bid in such a fashion. I mean, Mike, it wasn't even 30 days. It was 30 to 60 days. We were making new all-time highs, and then we were 100% above that. I don't know. I don't remember the exact math on like how high it got within 90 days or 120 days.
Yeah, it was quick.
And I think all of them, I think all these policymakers were looking at the speed at which they reflated the equity markets, which then was, which in their mind, they're looking at it and they're saying, oh my God, all these capital gains tax, they're looking at it as revenue onto their top line from an income tax standpoint. They're saying, oh wow, look at that. Like, we got this under control. We just need to do another one of those. We'll just bid the hell out of equities. We'll make all this money, and then we don't have any issues from a deficit standpoint. And so people looking at the markets right now, you hear all these people that are doom and gloomers and are saying, oh yeah, this is like going to be 1931 like all over again in equity markets. And I'm saying, you're not paying attention to the recent history and all these people that are still in office and what they learned, which is the only way we can keep this solvent is we need to bid the living hell out of the equity market. And there's no way we can let this thing start to melt down because we need all the tax revenues.
There's no choice.
There's no choice. There's absolutely no choice.
Yeah, obviously at some point it all falls apart. Yeah. But I'm sure it's like it always lasts much longer than you think it can. And so that's what I always tell people, like, oh, it's the end of the world. I'm like, I don't know. They seem to be pretty good at kicking the can down the road. Eventually we'll have to pay the piper, but I don't know if it's 5 years, 10 years. So what would you say is, how long do you think they can keep this going? So
this is what I would say to that person, right? Because what they're trying to do is almost to force you to live into their reality of not being a Bitcoiner and to say, well, it just keeps going on forever and ever. But what I would say back to force them to see the world through my lens as a Bitcoiner is, well, my net worth just goes up 50% every year. And so I don't know when it's going to happen, and I don't really care when it happens. Because when you're compounding money in your net worth, and I'm being conservative with 50%.
Yeah, I think historically it's been like 100%, right?
It can be in excess of 100% annualized. But if I'm being really conservative, I'm looking at a 40 to 50% compound annual growth rate, and I'm saying, it could go on for another 10 years. It doesn't really matter because take your net worth, take anybody's net worth, compound it at 50% for 10 years, and tell me if that person's concerned about when this is going to happen. And let me tell you, they're not too concerned. No. So I would flip the question, because I think a lot of times when you get into financial investing, it's people that think that they need to predict the future, and you don't need to do that at all. You just need to look at your array of potential opportunities and make an informed decision on what's giving you the best return. Have a very informed risk analysis on that selection. And then you don't have to predict anything. You can just sit back and enjoy and reap the rewards of that thing that hopefully you performed proper and thoughtful economic calculation. And if you did, you don't have to worry about predicting the future. You just made a very informed decision at that spot in time that was better than everything else. And so what's giving you better than a 50% return right now? I don't know. I haven't found anything other than Bitcoin companies that are early stage seed, maybe, right?
But even those are a hard sell to be able to outdo Bitcoin. So it's,
yeah.
Have you ever sat down? Coming from the financial planning aspect of it, the whether it's the 3% rule or the 4% rule they talk about in general. Have you ever sat down to calculate what that would be in Bitcoin with the returns that we expect, and how much less people would actually need to have saved for retirement in order to implement that rule if they were living on a Bitcoin standard?
I would just tell people the really simple math. We're at 70,000-ish right now, maybe slightly under that, but just as a ballpark. If you think the terminal value of Bitcoin is between 5 to 10 million, And we've been saying this metric for quite a few years, so it might actually even be more than that because of the fiat debasement that's happened since that talking point really kind of became popular. But you need about a 1% allocation to Bitcoin, 1 to 2% allocation to Bitcoin of whatever your net worth is. So if your net worth, let's say your net worth's $100,000, you need about $1,000 to $2,000 worth of Bitcoin today at the $70,000 price, in my opinion, to protect that $100,000 worth of buying power. Just as simply and matter of fact as you can kind of look at it. Any multiple above that would literally multiply that net worth. So let's just say it's 1%. Let's say you have $1,000 in Bitcoin and you have a net worth of $100,000. If you have $2,000 of Bitcoin, and this is playing out in the direction that we think it is, that is representing the buying power of $200,000.
Yeah.
And so what's going to be hard is when the price goes to levels, because when Bitcoin's at 500,000, I think you need 10x the position size. And boy, is that going to be really, really hard, because in most people's heads that are still living in the fiat world, they're looking at that and they're saying, all right, now it's 500,000. It could go down to 50 or 10 or 5. And there's so much risk at 500,000. And it's almost becoming harder and harder for somebody that's deeply ingrained into the fiat system to make the leap, and definitely to have the proper positioning size to protect their net worth.
It's almost like the flip side. They say most people, the thing they have the hardest time understanding is the risk of inflation. Like they think like keeping money cash in the bank is safe, but that's the most unsafe thing you can do, because inflation will just eat it away. And Bitcoin's like the flip side of that. They think the risk is being in Bitcoin when the risk is being
out
not
of it.
Being Bitcoin.
That's right.
So shifting things to here in El Salvador, I'm curious as to what are your thoughts on El Salvador's adopting Bitcoin as legal tender? Where do you see this going on, the global game theory? What type of countries do you think will be next, and what role do you think that will play in where Bitcoin winds up?
So I think one of the most interesting things, and I'm going to talk about Sailor a little bit, but I'm talking about that as an example of what's happening here in El Salvador. So when Michael put Bitcoin on his balance sheet, he didn't do it in a fashion where, like, you looked at his marketable securities on his balance sheet and he put 10% of it into Bitcoin. And if he would have done that, it would have been so much less demonstrative for other companies to understand what was happening.
Yeah.
But because he literally took all of it, and he was like, literally my entire $500 million of retained earnings, I'm plowing all of it into Bitcoin instead of Apple stock and Microsoft and all these other, high performing equities. He put on this clinic for anybody that's running a business as to what the real impact of putting Bitcoin on your balance sheet is. You have the exact same thing happening at a nation state level with Bukele in El Salvador, where he has literally given the middle finger to the IMF, the World Bank, and all these string pullers of the legacy system from a nation state level. And he's saying, you know what, we're just going to do things differently down here. And although it might not be like super in your face, like right out of the gate, because when you're developing nations and you're doing infrastructure development and all these types of things, it's a longer time frame than like what's in your face at a corporate level, or an individual level. I mean, it's just individual level, it's so noticeable. Corporate level, it's very noticeable. Nation state level, it's kind of noticeable. So he's dealing with that just because it takes a little bit of time.
Yeah.
But he has leaned into it very hard.
Which I thought, just most politicians, when things don't go their way right away, they back away. He doubled down.
He did not. He doubled down, and because he doubled down, he's putting on a clinic from the sovereign level, and I think that I'm very excited that he's going to continue to be around for longer, because it's going to help other sovereigns really kind of see the power of what's going to play out. I think by the time we get into the summer of 25, oh my God, it's going to be similar to MicroStrategy.
There's got to be other countries right now that are stacking.
No doubt.
But they don't want people to know because they know that it'll shoot the price up.
Yeah. Well, and I think that's the other challenge too, is like he has put it on full display. He has let everybody in the world know. He has taken a lot of risk by letting the whole world know what he's doing, especially from like the IMF and World Bank standpoint. And because he has done it in such a public fashion, I think it has put many leaders in the world on notice, and I think he needs to be applauded. I think that as a former military leader and somebody who has studied leadership a lot, you can lead by two ways. You can lead through fear, by scaring the hell out of your people, or you can lead through inspiration. And when I look at Bukele and I look at Saylor and many others in the space, they have truly went down this path of leading through inspiration and showing people what is possible with a positive outlook and a positive spin, as opposed to, if you don't take this IMF loan, and I'm going to jam this thing down your throat, and you're going to have this monocrop inside your country, and it's going to, every single person in your country is going to serve this much bigger world purpose, because if you don't and you default on this, we're going to wreck your world, which is basically the IMF and World Bank playbook. Because you have a leader that's choosing to lead through inspiration, I think there's other people that are taking note, and I think that in the long run, I think it's just human nature. I think it's a law of the universe that the ones that actually do choose to lead through inspiration are the ones that in the long run are the true string pullers of society and the world. So,
did you see his CPAC speech?
I didn't hear it, but I heard a lot of comments of just like how he crushed it, right?
He
crushed
absolutely crushed it.
Yeah.
My favorite part was, he preaching to the, you would think he's preaching to the choir there, and he's like, no, you guys don't understand. You complain about taxes. Your taxes aren't even really paying for all of this. You're printing this.
Yes.
You are destroying your economy to live at this level.
Yeah.
Even if you raise taxes significantly, you still wouldn't cover what you guys are spending.
No.
You guys are focusing on the wrong thing.
That's
and
right.
I think even in that audience, which was mostly a sympathetic audience, they were like taken back of, well, what do you mean we're not paying for it? It's like, no, you're printing it.
I would say, not to, because I didn't hear the speech, but based on what you just said, if you even go further upstream from that comment, it's what real value that society desperately needs is being paid for through that taxation or debasement in the currency. And when you really drill down into that, what you're going to find is they spend it on a bunch of crap.
Like the programs I was telling you about.
The programs you were just talking about, it's a total misallocation of spending, because at the core, there's not something grounded in economic reality and what nature has to deal with.
Yeah.
If you're a plant, you can't just create more energy packets. I mean, in humans, it's ATP. I should know what it is for plants. But for like a human, if you could just like create more ATP without the mitochondria having to doing the work by breathing more and eating nutrients to construct the ATP, well, then you could become a god here on the earth, because you could just run through walls. You'd have so much energy and whatever, right? But we have to, nature deals with physical reality, and it deals with it by having scarce things, breathing, our size. Like we're physically dealing with reality. And these countries that are just printing and keystroking units to then hand out to society is not dealing with reality or nature. They're making it up. And so that's a path that might work in the short term, but with enough time, we'll have to deal with reality.
Yeah. And you go back centuries, I mean, it always happens. You see this repeat and repeat. And we, for some reason, think it's going to be different this time, but
it will not.
So back to something that's really my passion, and seeing the way Bitcoin impacts people on the ground, especially people that have been excluded from the financial system. I don't think most Americans realize the damage that has been done to the poor in the world by the KYC AML laws that are pushed by the US on the rest of the world. And so that's our focus here, is the Bitcoin circular economies. I'm curious just as to what your take is. We've seen these spring up in other places. How much you think about that, or what you think, what role you think that plays in protecting Bitcoin as freedom money. And I want to talk a little bit about a recent, first I want to get your opinion, but a recent thing that's really scared the crap out of me that I've seen, where I think the direction the governments are going to go to try to limit Bitcoin. But I'm curious to your thought on Bitcoin circular economies.
So when we first understand why are they so hell-bent on KYC, AML, all this type of thing, when you look at how the legacy system is taxed, it's taxed because they're able to peer very deeply into the back end rails of every type of transaction, high dollar transaction, even small dollar or small denomination transactions. And because they're looking at that, they're looking, let's say you have a restaurant business and the IRS is just able to peer into everything that hits your cash account. They know who paid you. They know every single vendor. And they're saying, all right, well, we're looking at this. It kind of looks like his inflows are $3 million. It looks like his outflows are $2 million. Looks like he might have, and these would be amazing numbers for a restaurant, but it looks like he netted $1 million for a 33% margin. So that's what, if we're not receiving a check for $200,000 this year, well, then we need to audit this person, because based on the flows that we're peering into the back end rails, this is what it should be. That's the legacy system through and through. And so if we stop and we say, okay, that's how this system works, and we say, well, how would a Bitcoin system work, considering you can't peer into those back end rails? Well, you can still raise tax revenues as a government. You just have to do it on a sales basis. So if you have $3 million that come through because we know what your address is, we know what that looks like. We know that the number should be somewhere in this ballpark, because most restaurants, and I guess I'm going to change the scenario a little bit. Most restaurants, at best, are banging out 10% margin based off of the top line that's coming through. So if you made, 300 million or 3 million, if you made 3 million for the year, we're looking at like a $300,000 a net for that business. And so we think that the tax revenue should be 20% of that, $60,000. That's what the IRS would be looking at. So we have this change in dichotomy of this new system being taxed very differently. And unfortunately, you have all these bureaucrats that don't even remotely understand Bitcoin at all.
Yeah.
They definitely don't understand the solution of what to migrate to from a tax standpoint, because you can't peer into the back end rails of the system anymore. And because of that, what they are going to do is they're going to look at the legacy system and say, we need more of these protocols that we had to be able to peer into the back end rails, and anything that looks like it's going to jeopardize that, we need to try to kill it with everything we've got. And so you're going to have all these attacks on Bitcoin. You're going to have all these attacks on a sales-based tax structure, because it scares the hell out of them that they're not going to be able to peer into the back rails. Yeah. And so what do I expect moving forward? I fully expect, and it doesn't mean it's going to be successful. It's not going to be successful. But it doesn't mean that that's not what they're going to move to next, and what they're going to double down on, which is we need more KYC, we need more money transmitter laws, I wrote this whole FinCEN proposal, response, rebuttal, whatever you want to call it. And I mean, Mike, the amount of legal horsepower that went into them writing this proposal that's going to get approved. My response is more for on the other side, after Bitcoin companies and other people are hiring litigators to come in and defend themselves against the approval of this policy. What's really just difficult and just like really frustrating is I think it's only going to get worse. And I think they're going to double down on it. I think they're just going to continue to inundate the entire system, which just forces people to want Bitcoin even more. But yeah.
Well, that's why I feel like it's so important that we have people that start opting out of the system, that are operating only in Bitcoin, that are not needing the on-ramps and off-ramps, because those are the choke points. And we had a recent example of this, which really scared the crap out of me, because I think it's the direction that they're going to go, using soft power. Is we had somebody that was trying to buy a house. I wasn't involved in this, but I just heard secondhand, that was buying a home down here, for several $100,000. They wanted to pay in Bitcoin, and the seller didn't want to receive Bitcoin. They were an old couple that didn't really know. They wanted money in their bank account here. And so there's a few different Bitcoin companies here that will serve as intermediaries for a fee. And so they went to do the transaction. The guy had bought this Bitcoin from an exchange in Canada, goes to do the transaction, and the intermediary said, well, I don't know if it was chain analysis or whoever they're using, saying we can't accept this because prior to it being in the exchange, 90% of these UTXOs were at this gambling site, a legal gambling site. And so now this is dirty Bitcoin. So this guy bought Bitcoin from a regulated exchange, and now is being told that his Bitcoin's dirty and he can't use it. And this is how I think they're going to push people into the ETFs, into the, only use your custodial solutions, because if you don't, you might get bad, counterfeit, tainted, whatever Bitcoin. And if we as Bitcoiners allow this to happen, where there's two systems, where there's good Bitcoin and bad Bitcoin, then they've won.
I think that, so I love this. What I think this is a function of is where we're at in the timeline. So as this continues to play out and we get further down the timeline, what you're not going to have is the couple that's saying, yes, I want the fiat. That's what's going to change. Because where this is going is the fiat is going to be debasing itself at such a breakneck pace in the face of Bitcoin that instead of that conversion having to take place, they're just going to say, here's our wallet address. Of course I don't want whatever the local currency is. That's like asinine. Like, who the hell would want that, right? And because that change in the demand of the seller is why I don't think that policy is. But between now and then, especially at where we're at in the adoption curve, to me that story makes total sense. It doesn't surprise me at all. It doesn't surprise me that the gatekeepers think that they're winning in this, because what's coming next is CBDCs, which is in the government's mind, they're gonna be like, oh yeah, we really got them now. They really have to play our game. But what's not being discussed and what they don't understand is the amount of impairment offset that they're gonna have to do when fixed income continues to get obliterated. The amount of units they have to add into the CBDC and then issue out to people that have done no work, like the restaurant scenario that you described earlier, is gonna be so unbound. And those units are going to be circulating through the entire system, and they're going to be so worthless relative to this other thing called Bitcoin that it's going to reshape the mindset of the person who's saying, of course I don't want that as payment. That's idiot money. That's clown. Those are coupons. I don't want to receive coupons that are going to be worth half as much tomorrow. And so that's what we have going for us, that I think if a person was looking at it through the lens today, they're saying that's really scary. That's something that is a threat, and it is on the adoption curve. It might slow down the adoption curve.
It's going to be a headache for a while.
It's going to be a headache. I don't want to say that it's not going to be a headache, because it is going to be a headache, and it may slow down the adoption curve.
But I guess I'm going back to, I just want to make sure we don't get the majority of Bitcoin locked up in the ETFs in this world where it's not circulating. I mean, I think that's where the danger is, and that's my biggest
on that
thing I
point,
have against the ETFs.
So on that point, when we look at where the ETFs are today, I want to say that all of them combined, I should know this number, and I don't know this number, but I know it's more than what MicroStrategy has, which is 1%. So they're in excess of 1%. I don't think they're over 2%, maybe.
I think they might be now.
2 or 3%, let's say tops. For them to go from 2 or 3% to 5%, okay, which is twice as much, the Bitcoin price doesn't go to 140,000.
Goes to 500,000.
That's right. Now, let's play it even further. Let's say we double it from there and we say they have now 10%. Do you think that it's $1 million? No. Hell no. It is. And I don't know what the math is, but I do know one thing. The math is not linear. It is parabolic, and because it's parabolic, it is going to limit the amount of percentage that the ETFs actually capture in the overall amount of coins outstanding. And so in this is a function of nature. This is how nature functions. If something gets super desirable and there's a fight over the scarcity of things, the truly fit are the only ones that can acquire it. And there might only be a couple of them that are that fit to be able to acquire such a scarce thing. And so that's what's going to put a cap on the threat of ETFs acquiring too much market share. And the best thing we have are these crazy psychopathic OGs that are squatting on tens of thousands of coins that are living in a sleeping bag that have the Michael Saylor video playing with no furniture in their house. Okay, that is a really profound thing that if you're listening to this from Wall Street, you don't even understand what I just said, because it's a very like memeable, like, very I don't even know what I'm. Only people that are deep into this understand exactly what I'm saying.
The people
it's very
that are
real.
Like, I'm still short Bitcoin. I still have a $5,000 car. I can trade that down to
the people that have the most Bitcoin in this space are the people that look like vagrants in the back of the room.
No, that's what I love. One thing about Bitcoin conferences, you can wear whatever you want. And I always tell my wife, it's like the people in suits, those are the people that are there because they have to be there. The people that look homeless, they're the ones that
have all the Bitcoin.
They can buy everybody else out. Like,
that's right.
It is.
You don't know their name. They're squatting on, thousands.
Well, I think that's an optimistic point to leave on, the fact that the ETFs, just like you were saying, it'll be hard for them to really corner the market, to do a Hunt's brother type thing. So,
but people who have exposure to them, it goes back to that sizing. I really think the sizing should be pretty minimal.
I mean, really should just hold your own keys. I mean,
Amen.
Amen. That's what we want people to be doing. But,
Amen.
Where obviously people know that you have an amazing podcast, and truly, I love your podcast. There's a ton of podcasts out there, and I don't know, for some reason yours is the one I'm always like attracted to. I love the way you like delve into things, and so it's an honor for me to have you here on our podcast. But make sure people know where to find you on that. Is it multiple places, or is it just the...
So the feed is We Study Billionaires. Okay. The Bitcoin show that I do comes out every Wednesday, and I'm very active on Twitter or X or whatever name you want to call it, and obviously on Nostr as well. Just my first and last name, Preston Pish.
So just curious, just in closing, where do you see yourself like 10 years from now? Like, is this... Like, will you still be coming to Bitcoin conference? I say this because I'm asking myself. My wife asked me, like, how long are we going to do this for? And then and you see people in Bitcoin space, they kind of come in and come out, and they have Bitcoin and they're just kind of doing their own thing. Do you see yourself here for a while still, or?
I don't know, man. That's a question I'm very, and I think people who maybe listen to me might think that I make these predictions or whatever, but I like to think that I'm very grounded in today and just like looking at all of the array of decisions that I have right now, and I'm just trying to select the best decision out of like what I'm dealing with today. And for me, when I'm looking at a Bitcoin world, especially in the face of like all this AI stuff that's happening and where I think this is all going, I have no idea where I'm at in 10 years. The thing that I like inherently, I just want to try to create value for other people. I want to help educate. Education is like one of my core passions, And I'll probably be doing something in that realm of education. I really enjoy the VC stuff that I'm doing with Ego Death. It comes to all the valuation and just like I'm working in a space that I'm super deeply passionate about. But
that was one question I had when I posted on Twitter what to ask you. If somebody wanted me to ask, Harrison, a good friend of mine, wanted to ask if you've started looking at companies in El Salvador yet and finding any value here.
We are wide open to literally any type of company worldwide, from the early stage to Series A investments with Ego Death.
Which I love the name, by the way.
Thank you. Yeah, I didn't come. It was Andy Pitt, Nico, and Jeff that really kind of they briefed me on like, hey, we want to go over the name and the branding and stuff, and they told me the name, and I was like, I love that. Yeah. But anyway, I think that we're just really open to any type of jurisdiction. Now, obviously, we're looking at companies that we think might have a lot of risk based on where they have incorporated. And El Salvador comes up in conversations all the time. We have not made an investment to date, but it wouldn't surprise me in the least bit if there was a company that we did invest that was based in El Salvador.
Well, hopefully you make some of those connections here this week.
Yes.
So. Well, I'll let you get back out there to the fun, but next time you got to bring your wife and spend some time in El Zonte.
She would love it.
It's a beautiful, just relaxing place to be.
She would love it.
All right. Thank you, Preston.
Thank you, Mike.